Thanks for joining us for this next video. This is Accounting 301, Chapter 5, Question 1. We'll be focusing on long-term construction contracts and the two ways we can account for them through the percentage of completion method and the completed contract method. Let's briefly take a look at the scenario here. On June 15th, year 1, Golden Crest Construction entered into a long-term construction contract to build an airport in Washington, D.C. for $440 million. The expected completion date is April 1st, year 3. Costs incurred and estimated costs to complete at year end for the life of the contract are as follows. So what we have here are the costs that this construction company incurred in year 1, year 2, and year 3 alone. And then we have the estimated cost to complete that they've estimated at the end of each year, December 31st. So at year 1, they've incurred costs of $80 million, and they estimate that will cost $240 million more to finish the cost. Year 2, the estimate will be $120 million more to finish the project. And then year 3, of course, it's going to be zero because they will have finished the project. We have two questions we're going to be taking a look at. I'm going to briefly go through each of them. And the first one is asking us to find how much revenue and gross profit will be reported on the income statement for years 1 through 3. And we're assuming they're using the percentage of completion method. Second question, we're again looking for the revenue and gross profit on the income statement for years 1 through 3, but this time it will not qualify for revenue recognition over time. That's going to be our completed contract method. So let's dive deeper in these questions as we continue through the slideshow. Let's look again at question 1. How much revenue and gross profit will Golden Crest report in its year 1, year 2, and year 3 income statements related to this contract, assuming Golden Crest recognizes revenue over time according to percentage of completion? Let's real quick review the percentage of completion formula. It's going to be our actual cost to date divided by our estimated total costs. And we'll look at that again in a minute. What I have below here is a table you'll always see when you do these kinds of problems. It's the information necessary to help figure out revenue recognition and gross profit recognition. You have your contract price, and you'll see in red these two things were blatantly given to us in the problem. So for example, the contract price we were told up here is $440 million. So we can fill that in for year 1 since it wasn't in there yet. We need to know what our actual costs to date have been, not our estimated, but what we've actually incurred. We need to know what our estimated costs to complete are, and this is something that's going to be given to you in the problem, and as you can see, all the numbers were already given. Then we need to know what our total estimated costs are. Our total estimated costs are going to be our actual costs plus our estimated cost to complete. And last, we'll see what our estimated gross profit is each year, and then it's going to be the actual in year 3 because that's when we actually finish the project. So let's figure out first what our total estimated costs are in year 1. So our actual costs to date are 80. We are also told that right up here. Costs incurred during the year. 80. So 80 plus our 240 is going to give us our total estimated cost of 320. Moving to year 2, our actual costs. So we have 160 costs incurred during year 2 alone. And then we need to add that to the actual costs we incurred in year 1 because remember we're looking for actual costs to date. So we need year 1 and year 2 costs. So the 160 plus the 80 is going to give us 240 for our actual cost to date to list in year 2. And then just like in year 1, we add our actual cost to date of 240 plus our estimated cost to complete, and that'll give us our total estimated costs. And you'll notice the estimated costs to complete are lower in year 2 than they are in year 1. That makes sense because at the end of year 1, we still have 2 years left of work to do, so obviously it's going to be higher estimated costs. At year 2, we now only have 1 year left to work on the project, so our estimated costs are going to be lower. So that being said, let's add these two numbers up. You're going to get $360 million for total estimated costs. I'd like to quickly revisit estimated gross profit and just show you how that's calculated. We take our contract price and we subtract our total estimated costs that we have in each year to get our estimated gross profit. So you see 440 minus 320 is 120, 440 minus 360 is 80, and then year 3, of course, is the actual because we now know what our total costs are. 340, we just subtract that from 440, and we get 100 for our gross profit. Let's go ahead and do year 1 revenue recognition. First thing we need to do is find our percentage of completion for year 1. So we'll take our actual costs and divide it by our estimated total costs. So that's going to be 80 divided by 320. And that's going to give us 25%. And then we simply take that by the contract price, which is our total revenue, which will help us figure out how much revenue they will recognize in year 1. So multiply by 440 million. And that's going to give us 110 million to recognize in revenue for year 1. Year 2, again, we need to find our percent of completion. We'll have 240 for actual costs to date. And then we're going to divide that by 360, which are our total estimated costs in year 2. And that's going to give us 66.67%. We'll multiply that by the contract price, and then we need to subtract the 110 in year 1 because what year 2 that percentage is showing us is the percent complete through 2 years. So we want to subtract out the first year's amount to see how much you recognize in revenue alone for year 2. So after doing that, you'll get 183.33. And finally, we can do year 3. Year 3, you don't have to do the percent of completion formula because we know it's 100% because the contract is finished in year 3. So all we simply have to do is take our contract price of 440 million. We'll subtract year 1 plus year 2 revenue recognition, and that'll tell us how much to recognize in year 3 alone. That's going to be 146.67. So with that, we now can see what we'll list as revenue in year 1, year 2, and year 3. Now that we've recognized our revenue, let's now go ahead and recognize gross profit for each year. So real quickly, just below, I've recapped what we did on the previous slide for revenue recognition for your reference. With gross profit recognition, all we have to do is, as I'm sure you know, gross profit is revenue minus expenses. So we look at our revenue each year, and then we just need to subtract our expenses in each year. And both of those are given now. Now that we've solved for revenue for each year, then we just look up here. These are our costs incurred during the year. That's what we're going to subtract, and we have each of those numbers. So it's just a simple matter of subtracting the two numbers. So in year 1, our revenue was 110 million, and we subtract our 80 million in costs to give us 30 million as gross profit. Year 2, revenue is 183.33. Costs were 160. That gives us our gross profit, 23.33. And in year 3, revenue 146.67. Cost during the year, 100. We subtract that. We get 46.67. So with that, we've now found out what our gross profit or loss is for each year under the percentage of completion method. For the last part of question 1, we just want to show you an alternative to calculating gross profit, and that's directly using the percentage of completion method. What we were doing in the previous slide was simply subtracting our revenue minus our costs, which we'll get the same answer, but this is just another way of doing it. So for example, in year one, remember we have 25% of the project completed, and then what you can do is take the estimated gross profit numbers given in each year and multiply them by that number. So in year one, you take 25% times 120. That gives us 30 for our gross profit. And if you look up here, that's what we got in our other calculation. Down to year two, multiply by 80. That's going to give you 53.33. And just like when we're doing revenue recognition, you need to subtract year one amount to tell you how much alone is in year two. So we subtract 30. That's going to give us 23.33. Also the same that we calculated earlier. And last, year three, again, you don't use the percentage because it's already 100%. So what you would do is start with the 100. That's already given because that's the actual, that's not an estimate. So we take 100, and then you just need to subtract years 1 and 2. And then that's going to give you 46.67, which also agrees to what we saw for earlier. So just another method of doing it. If you do want to subtract and you actually want to see it done with percentages, you could do it this way as well. Let's now take a look at question 2. How much revenue and gross profit will Golden Crest report in its year 1, year 2, and year 3 income statements related to this contract, assuming this project does not qualify for revenue recognition over time? So if you recall from earlier on, if it does not qualify for revenue recognition over time, it's the completed contract method. So it's very simple to report on what we're going to do on this table here. If you can't spread the revenue and gross profit over years 1 and 2, it can only be year 3, then you just don't record revenue or gross profit for year 1 and year 2. So it would be 0 year 1, 0, 0 for year 2, and then all the revenue and gross profit will then get reported in year 3 because the contract is then finished in year 3. So now that it's all done, they can record it all. So they'll record all 440 million. If you recall, that's the contract price, that's our revenue. And it's not on this screen, but the gross profit was 100 million, and that was given to us in the problem, and you would see that on the slide before this one. But that's all you have to do for a problem that does not qualify for revenue recognition over time or the percentage of completion method.